what I would prefer to do is find something that works now where I have time to think about it. I'm not competing with a lot of people. I can get the deal. And I do think, I know this is a bold statement, it is going to be like that again. When rates move to below, I would say close to 6, things are going to get crazy.
All right, guys, welcome to another episode of The Report. Today, we got a big meetup, and I got a special guest who actually just came into town. Compliments of Amanda Hahn. You guys shot a little content before, and it's the second time on the podcast. I got Avery Carl. Avery, welcome to the show a second time.
Yeah, thanks for having me.
Yeah, appreciate you coming on. Last time we connected was in Nashville at the STR Wealth Conference of 2023.
Yes.
And we shot a podcast in our Airbnb that we were staying at. And I think we just missed each other in San Diego when you were out here for Patrick's event last year. And then we missed each other like 2 months ago back in Nashville again.
Yes, twice.
Man, I'm like, how did we miss each other 2 times?
I don't know how
Yeah.
that happened.
Well, love the vibe. You always rocking the Converse and always dialed in. So very impressive. What have you been up to?
Just hanging out, just working on things, kind of just chilling a little bit, to be
Yeah.
honest.
Okay.
Yeah.
I like that.
Yeah,
What have you
yeah.
been working on?
So getting into some new markets with a short-term shop, just trying to find deals, as an investor, looking for those
Mhm.
deals. I got a couple apartment buildings in the Midwest. I'm trying to unload in 1031 exchange, and we can talk about that. That was a little bit of a failure.
Really? What
Well,
happened?
actually, not my fault necessarily, but
Okay.
so we bought in kind of a transitioning neighborhood, and one of the apartment buildings across the street that we do not own, he just kind of let it fall apart, and it became like a squatter situation, and it became a situation where the city condemned it because he just let, windows broken, just like let it go. And so it's making people not want to rent ours. So we're like, maybe we'll just get rid of this and be done with it. So probably going to 1031 exchange those. I think it's 12 units into 1 or 2 new short-term rentals.
Nice. Which market is the apartment building in?
It is in Ohio.
Okay.
So,
I'm selling an apartment building in Ohio right now too. Actually, 2 of them.
oh yeah,
Yeah.
see, it's so,
Into a short-term rental.
see, I mean, I do love my apartment buildings. So we've got over 200 doors worth of apartments, and those 2 just, gotta have a dog every now and then.
I hear you. I hear you. Yeah, I'm selling 2 in Cincinnati, and one of them was the first deal I bought is 11 units, and I realized I'm like those deals they're great. I love them. They cash flow, and I have a good property manager that operates them. But I'm really bullish on San Diego real estate, and there's an opportunity here with the city of San Diego. There's still 700 short-term rental licenses left with the city of San Diego. Once they're gone, they're gone. And we manage in 8 markets in the country, and San Diego is the best market that we manage in. And so I'm like, you know what? I'm going to be kicking myself down the road if I don't pick up another one here in San Diego. So I decided I'm going to sell both of those properties and I'm going to move the equity into a short-term rental here in San Diego. So I'm under contract on both the Cincinnati 11 unit. I got a buyer, and then I'm under contract on the buy side here in San Diego. And the cool part is the seller here in San Diego already knows us. She comes to our meetup,
Oh, cool.
and it's already operating as a short-term rental. And so she said, hey, you guys can just take over the property as soon as we go under contract. So the second we sent in the EMD, we just took over the property kind of on a master lease. And so now we get to operate it until the Cincinnati property closes and we actually take possession of the property. So it's been kind of cool.
Yeah, that is. I love that you're doing that because everybody right now wants to talk about like saturation and there's no more deals left and San Diego or things are overpriced, and San Diego is a very expensive market. So for you guys to be like, no, we're going to double down on this expensive market, I think is cool.
San Diego is one of the most expensive markets in the entire country. And I hear people all the time say, oh, like, why would you buy there? It's so expensive. But it's actually the number 2 market on the Marcus and Millichap 2024 forecast. And they rank the top 50 markets in the country. San Diego's number 2 in 2024 in terms of a lot of different things that they factor. But one of them is long-term appreciation and growth. So if you look at the 4 major markets in California, you got the Bay Area, Los Angeles, Orange County, and San Diego. I think San Diego, you could argue, is the best beaches, the best climate, the best weather, except for today. It looks like it's about to
It's
rain.
cold here today. I was cold today.
Yeah, I will say I run hot, so I run it a little bit cold. The girls always have blankets, especially on podcast days. So the only day of the week is like Wednesdays where we do podcasts. I'm like, all right, you guys can rock the thermostat any day of the week, but Wednesdays we're cranking this thing. And this unit in the podcast studio has been broken for like a week and a half now. So we'll crank that one extra cold so it will kind of flow through to here. So that's probably what you felt.
Oh, no, no, like, outside. I
Oh,
went out to
outside. Okay,
dinner
okay,
last
okay.
night. I'm like, "My gosh, it's cold. I had to stop in
Mm.
Athleta and get a sweatshirt."
Did you really? My gosh, that's pretty funny.
I'm a wuss, though, about
It's okay. Where'd you go to dinner?
we went to a taco stand in La Jolla.
Okay, nice. Love a good taco.
Yeah, we don't have good tacos in Florida, so
No.
had to.
Where do you live in Florida?
I live in 30A, so in the
Okay.
Panhandle.
Okay.
Yeah.
Interesting. I like that. For some reason, I always thought you like lived in the Smokies. Did you used to?
So I used to live east of Nashville. So we lived in Nashville for 8 years, and my real estate career and real estate investing career kinda started in the Smokies, so that's probably why I think that. I moved in COVID in 2020. My husband is a classic rock DJ on Sirius XM, really just part-time now because we have so much real estate that he just, does that, manages all that for us.
I see your husband sometimes on your content.
Yeah,
Yeah.
yeah.
What's his name?
His name's Luke.
Luke. Yeah, I love that.
Yeah, I have forced him. He doesn't want to. He doesn't like to be the center of attention. As someone who is a radio DJ on Sirius XM for a living, doesn't like to be the center of attention. But anyway, during COVID, Sirius said all of the jocks can work from home. They just like had a list of what their studio had to have. I'm like, okay, well, we've got 20 markets where we operate in real estate, and Nashville is not one of those. So let's move somewhere cool. And I'm a beach person, so I got to pick that.
Yeah.
Yeah.
I love that. You guys were like in a band together, right? You and Luke back in the day?
Not together, separately.
Separately. You guys were both in bands.
Separate bands, yes.
Wow. Is
Yeah.
that how you met?
No, actually, so he was already done with he was a drummer. I was a guitar player, toured in just a bunch of, like, sloppy punk rock bands, but got to tour all over the world and, have to sleep on the floor of a van, but got to do it.
Yeah.
So no, I met him at this, like we're both into classic rock and 80s hair metal, and so we were at a very obscure 80s band called Faster Pussycat. They were playing at the sleaziest, darkest, like, drunkest bar in Brooklyn, like, nowhere that you would ever expect, like, "Oh, I'm gonna go meet my husband here."
A dive
And
bar.
yeah, and he was had some cocktails, and he's very tall. He's 6'4", and he, like, leaned up over the top of me, and I was like, "What are you hi." And he was like, "The next song is gonna be Poison Ivy." And I was like, "How do you know that?" And he goes, "'Cause I saw him 3 days ago." And then he didn't get my number or anything. And then in New York City, I ran into him again 3 days later at a different show, and he didn't remember me, but he came up and hit on me again. And, I was like, "Oh, you're the guy from Faster Pussycat." And he goes, "I am?" And I was like, "Yeah." And again, didn't get my number. And then 3 days later, we ran into each other at another show. So finally, he was like, "Okay, I've run into you 3 times. I'm gonna get your number now."
Were you into him on the first outing or the second outing where he didn't get your number?
Oh, yeah.
You were.
He's tall and
You
very
were
hot.
hoping
Yes.
he would get your number. Okay.
Yeah,
Okay.
yeah. I
Okay.
was like, "That was dumb." So,
Yeah.
but
What are the chances you run into each other 3 times in what, 6 days?
yeah, in New York City of all places.
Same venue or no?
No, all different ones, different
Wow.
parts of the city.
That's
So
even
Brooklyn,
crazier.
Lower East Side, and then High Line, all different areas.
Yeah.
Yeah.
That is pretty crazy.
Yeah.
Yeah, I think that's I've been to like New York a couple times and I love going out there. I've never been to like any like dive bars to watch like shows and stuff like that, but I can imagine like the music scene out there is probably pretty cool.
Yeah, it is. It's a lot of fun.
Yeah.
In your early 20s. Now that I'm in my mid-30s, I'm very happy, comfortable in my small town in Florida. But in my early 20s, oh, it was like the best. It was like the best time to live in New York. It was super safe. You're always like one mayor away from it being awesome or not awesome. And
One mayor away. I like
yeah,
that.
so it was the best time to live in New York.
And so from there, you guys moved out to Tennessee.
To Nashville,
How
yes.
did you guys go from dive bars, listening, playing in bands to investing in real estate? Like, how did that come to fruition?
Well, so I started down the playing in bands path because I graduated undergrad at the worst time ever to graduate at spring of 2009. So there were no jobs. And I'd already been playing in bands and stuff, and I bartended all through college. So I said, I guess I'm just going to do this for a while and wait for the market to come back around. So did that, ended up in New York for a gig and met him there. And then we said, oh, okay, well, we're comfortable. We kind of want to settle down. And New York is just a really hard place to do that. Like one of us would have had to double our income to just get a bigger apartment. And so Sirius had an office in Nashville, so he could just transfer. And we said, well, let's try that. It's closer to my family in Mississippi. And at the time, it was still affordable. This was in 2012. And our real estate agent at the time was really trying to get us to buy in this like super hip area of Nashville that was appreciating really fast. And we said, we're moving from Brooklyn to Tennessee. We want to be out in the country. We're done with neighbors. We had first floor Steve and second floor Steve in Brooklyn.
What does that mean?
We lived in a 3-story. Guy on the first floor was named Steve. Guy on the second floor was named Steve. And we lived on the 3rd floor. And
Whoa.
so, second floor Steve would get cranky about like if we were walking around in our boots after the bar. But he is a really interesting guy. So he owns keylime.com.
Okay.
And
What is that?
it's just he is
Key lime pie?
Yeah, he makes key lime pies
Whoa.
in Brooklyn. And he has that domain, which how do you even get that? And they're really good. But he would get up at midnight or 1 o'clock in the morning, go to the bar on the way to the pie place, the pie factory, and then start his day, and he'd be done by like 10. I don't know why they had to make pies in the middle of the night. I never asked that question. But anyway, done with that. We didn't want neighbors, so we bought out in the country in Tennessee. But we thought, man, maybe there's something to that houses appreciating thing. And we didn't know anything about real estate investing at the time. And we knew we wanted to have kids one day. And we thought, well, what if we buy one of those and put a renter in it so we're not like having to pay for it? And maybe by the time our kids have to go to college, we can just sell it and pay for that out of the appreciation, which is totally stupid, but that's what we did. We actually first went to, and I was telling Amanda this story earlier, we first went to an Edward Jones. We had like 10 grand or something like very small saved up. And we're like, hey, how do we invest our money? And they told us we didn't have enough money to invest with them. And we were like, oh, okay. Like walked out with our tail between our legs.
Humbling.
Yes. And so we started thinking about, at the time you could get a house in Nashville for like 100,000, 120. And so we just saved up. I put us on a $20 a day budget each, that extra 10 grand. And we went and bought a single family. The mortgage on that was $650 a month. We were able to rent it for $1,500 a month. So it was really great for a single family long-term.
$120,000 in Nashville.
Yeah.
What does that house cost today?
We sold it about 3 years after we bought it for $250. It probably would be in the 300s now if we held on to it. But that was about what I was making after all the deductions and everything at my W-2. I thought I had my dream job, like went back to get my master's, worked in the music business in Nashville.
Well, you got your master's degree.
Yeah.
What
MBA.
were you working as?
So I was working as a marketing manager in the music business. And the thing about the music business is it's so cool and sexy. Everybody will do it for no money. So there's really it's not a lucrative way to earn a living. So I was making $37,000 a year.
Damn.
Yes.
With a master's degree.
With a master's degree. And so we found like this house was making about what I was making a month while I was asleep. And so we said, well, there's something to this. And then we started listening to podcasts and learned that it was called real estate investing. And we said, we want more of these things. And again, we only had a little bit of money saved up and really just enough for another single family house. And we said, well, what can we buy that's going to make us the most amount of money the fastest? So we're in like 2015 now. And we said, oh, how about a short-term rental? And Airbnb and everything was just kind of coming on the scene. Yeah. And we knew we didn't want to do it in Nashville because they were already very anti. But we'd just been on vacation to the Smoky Mountains in Tennessee, about 3 hours east of Nashville. We stayed in a cabin. Our friends stayed in a cabin. And we said, well, somebody owns these cabins and they're renting them. Why can't that be us? And we were going to use a property manager. Found that the standard split at the time was 40% of your gross. And we were like, well, we can't afford that. We got to take that 40% to buy more houses. We can't pay you that. And so and back then there were no courses. There were no influencers in this space. I think AirDNA started the same year we bought our first property, which was again, 2015, I think. And so we just figured out how to self-manage remotely and it all just kind of snowballed from there.
That's crazy.
Yeah.
And you met your husband in the bar and you said he was drinking, you guys were drinking. And you're no longer drinking.
No.
You said
one
5
of us.
years.
Yeah, 5 years, both of us.
Luke too.
Yeah,
What
Luke
was
too.
the reason you guys stopped? Do you mind me asking?
No, not at all. So I noticed when I was pregnant with my daughter, where obviously wasn't drinking, that my business went like this for those 9 months. And then we had her, she got a little older. And, we would drink here and there at nighttime when she was asleep. But what we noticed was the next day, even though we weren't drinking around her or in front of her, she was asleep, the hangover situation makes you, or at least made us, very you said earlier, like 60% there. So it did not feel good to feel like, oh, we're not giving her 100% because we're hungover. Like, that's gross. That's not a good feeling. So we were like, we're just not going to do this anymore. And it has really been probably the best decision we've ever made. I mean, we like to have a good time back then, but we weren't like, every day. But, I mean, just not drinking a couple times a week really has made a difference in everybody's productivity, and it's been great. So, I'm a very much advocate for, like, not drinking. No judgment if you do, but for us, it really just has been really beneficial, so
I can only imagine what it's like after 5 years, but, like I mentioned, before we started recording, I've been drinking 18 days, and, ever since I've been, like, 18 years old in college, I've always, drank socially, and I've never, like, intentionally gave myself a break, you know? Of course, there's weeks where, like, I didn't drink for 5 or 6 days, or maybe I didn't drink since the weekend before, but I think on average, I would drink, like, 2 to 3 times a week, maybe, like, a happy hour, or maybe there's a meetup during the week, I would have some drinks, and then the weekend for sure. And, like if you're drinking 2 to 3 times a week, it's like, well, that means 2 to 3 times the next day, you're going to be operating at 50%, 60% of your usual self. Some people never get out of bed the entire next day. And, that compounds over time. And so I decided recently, I was like, you know what? I want to see what this is all about. I'm just going to try it for 14 days. Something that's manageable, is easy to wrap my head around. And we had a yacht meetup 14 days later. So I thought this is perfect. I'm going to try it for 14 days. I'll see what it's all about. And then I'll drink on the yacht meetup. And I got to like day 7 and I was like, "Whoa, this is pretty crazy." Like I already felt like completely different. And I knew like at day 7 days in, I told the team, I was like, "I'm gonna fuck 14 days. I'm gonna keep this thing going." And so, now I'm definitely gonna do at least 100 days, but I think this is likely gonna be my new way of life. Like I think I'm gonna get to 100 days and be like, "This, I'm not going back." And I'll tell you why. I think what I didn't realize, and this is one of the biggest limiting beliefs that I had, I always thought that if I wasn't drinking, I couldn't go out in the nightlife. I couldn't be in the industry scene. And I'm a very charismatic guy. I love going out, and like that's just part of who I am. And I want to still be able to do that. And I always thought if I wasn't drinking, I just couldn't go do that. And so 2 weekends ago, I went out and did it, and I was around all that stuff. And what I found was I actually enjoyed it more than drinking and being intoxicated, because I was just more present. My conversations were better. Everything about it was better. I was more dialed, and, I would go to these like parties and stuff, and I would be like the sharpest person in the building because I'm sober and everyone else is like, getting drunk. And then the next morning, I wake up and I have zero hangover. I'm working out, going hiking on the weekend. I'm working on my business on the weekend. And then I have even more time to socialize. And so my social life has actually gone up. I can do more activities now, and I'm waking up earlier. My fitness has been on point. Like everything is getting more dialed from a fitness standpoint. I'm working on the business a lot more. There's literally no downside to this, and I'm like, "This is
Yeah, there
addicting."
really isn't. That's
Yeah.
the thing, it's like, people are like, "Oh, it's gonna be so boring," but it's like, it really didn't, looking back, add anything to our
No.
life, and,
No.
for me, I'm the opposite, so I'm very introverted, I'm very uncomfortable around a lot of people, like, even if I know everybody in the room, I'm like, "Eh," like, social battery is very, very, and my husband is the opposite, he's very hyper, he's very social, and so if I don't have him with me, I felt like, "Oh, I need to have a couple drinks so I'm, like, fun." But, I've found that's not the case, but I thought it was for so long, which actually it would cause more anxiety.
If you have a drink?
Yeah, because in the
Why?
morning, I felt fine at the time, like, "Okay, I'm loosened up," but in the morning, you're like, "Oh my god, that was so dumb. I was talking so much, I said such stupid things." So, it's been great for us, so
Yeah, that makes sense. I was, like, trying to think to why, like, I started drinking, and I think I started drinking in college because everyone drank in college. That was just, like, the cool thing to do, but I thought deeper, I'm like, "Why did I drink?" And I think the reason was because, a lot of people get into drinking because when they get in a group setting, they feel like they have to have a drink or 2 to kinda let their guard down, like you're alluding to. But I'm like, now at 38, I am so comfortable with who I am. I am already loose sober. Like I don't need to have a drink to like loosen up. I'm already loose. And so I found that like I can go out in these environments where everyone's drinking. Like last weekend we had the yacht meetup and everyone's drinking but me. But like I just drank soda water and lime and like I felt loose. I felt like I was having a great time. I'm not like this person in the corner that's like, oh man, I can't have a good time. It's not like that. Like I'm totally having a good time. And then afterwards, we went to Gas Lamplighter, which is like a new karaoke bar here. And I got a couple tables, and everyone's drinking, have a good time. I bought the 2 tables. I didn't even drink, and I was like, I didn't even have any inkling to drink at all. And I'm just like, had a great time. And next morning, I felt great. Everyone's in bed all day, and I'm just like, out here riffing it. And so it's almost like a game to me now. I'm like, I was able to build all this drinking and doing all that sort of stuff. Now I'm like, okay, my productivity has gone through the roof. And I'm like, okay, what's going to take me the next 2 to 3 years to accomplish? It's almost like a game now. Can I accomplish the next 2 to 3 years in the next 7 months? So we'll see. We'll see. I'm going to do 100 days and then I'm going to do like I want to do like a vlog on like what it's like not drinking for 100 days and kind of like my biggest takeaways. And I want to do a podcast too.
Yeah.
So we'll see.
Well, I look forward to listening to that.
Yeah. What was like, okay, so this is only 18 days for me, and my energy every single day gets better and better and better. And I'm like, what is it? I mean, everything's getting better. I feel sharper and sharper and sharper. I'm like a sniper now. Even my confidence has gone up. And I'm like, oh my gosh. So what does it feel like 100 days in and even a year in and you're 5 years in? Like, what does that feel like? I can't even fathom.
I mean, it feels great. It becomes normal
Yeah.
to where I'm trying to think of like how to articulate that because nobody's really ever asked me that before. The further you go, like the longer you go without drinking, the more you don't want to ever
Yeah.
again.
Mm.
So, because you come so far, like it's been 5 years, like, no, I'm not gonna accidentally, decide to have a drink. Like we would see Judas Priest this weekend because it's like it's been 5 years. Why would I break that streak yet? I feel great, and there's it. You just really realize the further removed you are from it, how much it doesn't add anything. So it feels great. I love it.
Yeah, and I know it's one of those things to where, if you do it in moderation or socially 2 to 3 times a week, and your body's kind of used to it, it's more enjoyable. But if you took like a bit, even now, 18 days removed, if I know if I had a drink right now, I'd be like, whoa, kind of thrown back, and it probably wouldn't be as enjoyable as if it was like part of my life. And so, I don't know. I have no inkling to do it. I don't. I'm like totally cool being around it, and I get it. I did it for 38 years, so I get it. A lot of my friends do, and I support it. Cool. But this is going to be a new chapter for me, and I'm excited for it. And so we'll see how it unfolds.
Yeah, well, good for you. I'm excited for you.
Yeah, I appreciate you. So, anyway, so we were talking about why San Diego, and I'm like, okay, it's like an island, right? So the north you got Camp Pendleton, to the west you got the Pacific Ocean, to the south you got the Mexican border, to the east you got the mountain ranges. So from a supply standpoint, there's not a lot of land to build on. And I think it's the most affordable market out of the 4 major markets in California. And I think a lot of tech companies are migrating down here. I think the cat's out of the bag. More and more people are coming to San Diego. I know from like my circle, a lot of people that move out and they don't realize they don't realize what they left. They always end up coming back to San Diego. They're like, oh my gosh, I didn't realize what it was until I left. And a lot of people migrate here. So I think, and I'm speculating, I think there's a lot of opportunity for growth here. And so that's why I'm selling the property in Cincinnati, or 2 of them. And like those things are never going to be worth millions and millions. And I'm going to move it out here. And that's it.
Yeah, I think people can get so caught up, myself included, in cash flow that they end up focusing on markets that are not actually desirable real estate to have. So whether that's short-term rentals or long-term rentals, well, let's take like multifamily, for example. I kind of feel like multifamily is sort of like the older sibling of short-term rentals because it's very well established. It's been that way for a long time. It's stabilized. Short-term rentals, we're now getting to be kind of stabilized, and which means the strategy changes. So I think people in multifamily get so caught up in, oh my God, I found a 15 cap just laying around on the market. Well, that's probably in like Memphis or Gary, Indiana, or somewhere that is not desirable to own stuff. And they did the same thing with short terms, like, well, where can I buy that nobody owns anything? Because I need it to be this cash flow. But like 30A, where I live, super expensive, but you are never going to not have tourism in 38. It's been that way for decades and decades. It's
High growth market too.
yeah, yeah. And so it's never going to be like, do I need it to be worth millions and millions? No. It's doing what it needs to do for me now, cash flow wise. But I like that better than, like the Ohio's where it's the cash flow is there, but the rest of the puzzle isn't. So I think that people kind of need to remember to step back and like look at the whole picture of, well, are you buying in a weird short-term rental market just because there's 3 short-term rentals there now that are making a ton of money? And is that sustainable? Like, are the drivers of the tourism in that market sustainable to where if a bunch of people move in, you're actually going to still be able to do it? So same thing, with like a San Diego. It's super desirable. Like you said, it's a great town. Then you've got, the ocean, the mountains, all this stuff. Yes, it's super expensive, but there's a reason for that.
Yeah.
Because it's desirable.
100%. And, you mentioned people are looking for 15 caps in Gary, Indiana, or some of these undesirable markets. Like, yeah, that's great. But, what's a cap rate? It's a market's opinion of risk adjusted return. And the reason the cap rate's so high is because not a lot of people want to buy there.
Exactly. Yeah.
And so, I don't know. I think my progression has changed as a real estate investor. Like initially I wanted to get in and I was like, oh, I want some cash flow. And I think for my first couple of multifamily deals, it made sense because a lot of those high cash flow markets, it's really hard to lose, right? Like you're not going to make a ton of money, but you're also not going to take a big bath if you make a mistake. So I think it's a great market to kind of start in, but and get your feet wet. But then as you buy more assets and you get to a certain level, I feel like your progression will change as a real estate investor. So my progression used to be like, oh, I wanted all this cash flow. Now I'm like, I just want to park my money into good assets that over 10, 15 years, they're going to give me a really good shot at doubling in value. And I know some of the stuff in San Diego will double every 12 to 15 years like clockwork, where stuff in Cincinnati, probably not,
Yeah.
it is what it is. So I don't know. We'll see what happens. But I think everyone matures in terms of their progression as a real estate investor, and there's no right or wrong. I think you can make money both ways. I think cash flow pays the bills, but if you really want to create a long-term generational wealth, it's through appreciating assets, sitting on them for a long time.
Yeah, I
Yeah.
agree.
If you love real estate investing, passive income, and tax benefits, but don't have the time, my company, Summers Capital, is buying boutique hotels right now. We source the deals, we renovate the properties, and we even handle all the day-to-day management, making it truly hands-off for our investors. If you want to learn more to see if we can help you, visit summerscapital.com/invest to book a call with our team. Again, that's summerscapital.com/invest. Now back to the show. Okay, so it's funny. I was thinking about it before we started recording. You and I have done like a few podcasts together now. This is the second on my show. I've been on your show once, and I interviewed you on my old podcast, the Multifamily Takeoff, like back in the day. So this is the fourth time now, I think.
Oh, yeah,
Yeah,
I guess so.
it is the fourth time. 1, 2, 3, 4. That's kind of crazy.
Yeah.
So, anyways, I wanted to ask you. I remember when I first interviewed you, your idea was like, I want to buy more multifamily, and you had like 7 or 8 short-term rentals that you were kind of managing at the time and self-managing them. And you're like, I just want to buy more multifamily, and we want to pay them off, and eventually want to have no debt on those properties, and then we're just going to kind of chill. Has that strategy shifted at all, or is that still your strategy today?
So we kind of have our 3, I call them machines,
Okay.
running at all times. So we've got the multifamily where we're always looking. That asset class is weird right now. We've always got our single family rehab model running where we will buy properties, rehab them, and rent them. We don't typically refinance them. And then we've got our short term one running also. So depending on what the market's doing, will kind of determine which thing we're buying the most of. But we're always looking for more of each. I am still kind of at that crossroads of like, okay, we could buy a bunch more real estate and create a bunch more work for ourselves. Even if you're, with all our multifamily and stuff, it's with property managers, our single family long terms, but it's still like bullshit to deal with. Like we had one burned down on Thanksgiving. So our property manager called us on Thanksgiving and he's like, one of your buildings is on fire.
Really?
Yes. And
What kind
luckily,
of property was it?
so it is a 35 unit, but luckily it's separated out into different buildings. So it was a 6 unit in there, but we didn't know for 30 minutes if anybody was hurt, whose fault it was, how it started, like all this stuff. And we're just like sitting there like, oh my God. And eventually we found out it was a careless cigarette smoker that
Damn.
threw it over it's so dumb. So all that's handled, but it's like,
Was it a loss with all 6 units?
I think 2 of them were okay. Everything else has got to
Damn.
be full rehab. But
I'm sorry to hear that.
well, it happens. You learn that it's okay. Nobody was hurt. The liability was not on us, thank God. So,
And I'm curious, how did that go with insurance? Because I know with commercial insurance, it's like the wild, wild west. We had, record rainfall in January, and one of our newly renovated hotels here down the street had 4 of the units have water damage, and they came out and they initially denied our claim.
oh,
And
really?
so, and now we're working with the public adjuster. And so my big takeaway was, okay, if you're dealing with a big insurance claim in the commercial space, one of my team members was actually dealing with the insurance company when they denied it. And so my takeaway was like, let's not even deal with the insurance company. Let's just work through a public adjuster. But I'd love to hear how that went with the insurance on your claim.
It went very smoothly and relatively quickly.
I love that.
So, yeah, so we're working on rebuilding that now. But anyway, the more doors you own, the more bullshit you have to deal with,
Yes,
whether
absolutely.
it's passive or not, And so we're like, okay, we could buy more to create more cash flow and more equity and all this stuff and have all that work, or we could start paying some things off. So we haven't paid anything off. We've been having this conversation for 2 years. So maybe we're just not going to do that. But I think we are going to buy at least 2 new short-term rentals this year,
Okay.
which is kind of painful. Like it's uncomfortable to do because the interest rates are so terrible right now. But what I really do think is going to happen in the next 2 years is so rates dropped half a point in the last 2 weeks, even though the Fed yesterday was like, we're not moving rates. Like we're not looking at any drops this year really anymore. But because of the CPI and the PPI, really just the CPI that came out today, rates dropped quite a bit. Anyway, all that to say, there's no competition in the market right now if you can find a deal. So if you can find anything that even comes close to making sense or does make sense, not comes close, don't go tell people I told you to buy stuff that doesn't make sense. So finding a deal that makes decent sense and being able to refinance it later, because here's what I do think is going to happen. I'm not just talking about short-term rentals and investors. All of America cannot afford to move right now. They can't even afford to downsize. I got pissed off at my builder building my house to live in the other day and went and started looking just to buy something. For me to downsize, even from what I have, is almost 2.5 times the cost of what I paid for my house that I own right now in 2020. And it's a double interest rate. So for me to even downsize, and who knows who else, how other many millions of people have that same issue.
Everyone's landlocked.
Yeah, everybody is locked up. And what I think is going to happen, I don't think that prices are going to come down ever, really.
No, that's a testament to how strong the fundamentals are. Because if you would have told me 2 years ago that the interest rates were more than double for 24 months or whatever, however long it's been, and real estate prices would be relatively untouched in most markets around the country, I would have thought you were crazy. But that's the truth. And it's a testament to how strong the fundamentals are. I've read articles that say we're 5 to 6 million housing units short of where the demand is. And I had Kenny Simpson on the podcast recently, and he brought up a good point. He said, there's like 30 million houses in America that are like dilapidated, that like are just ghetto and like no one's going to live in. Right. And so he's like, take those 30 million off of the freaking table. And we're like 35 million housing units short of where the demand should be. Think about that. So anyways, you're saying.
Yeah. So it's crazy because here's what I'm not telling everybody to do this, but here's my thought process and what I plan to do. So, 2 years ago, so we're the top team at EXP, short-term shop, in the world. The other 3 teams right behind us are in San Diego, all of them. And what we saw, or what we see,
Congrats, by the way.
oh, thank you. But what we see happening in the market is like a pretty good cross-section. Our business is a pretty good cross-section of what is happening in the entire market. So when interest rates were 2% and everybody in like their chihuahua could buy a house and make a payment on it, there were literally, we would have listings that had 100 offers on them. So right now you're not having to deal with that. But something else that's interesting, we have the same number of clients coming through our doors every month that we did at the height in 2021, but closings are down 40%. So that is a lot of pent up demand. And what I would prefer to do is find something that works now, where I have time to think about it. I'm not competing with a lot of people. I can get the deal. It's much easier to refinance that later than to be jumping in at the same time as everybody else when there's going to be, and I do think, I know this is a bold statement, it is going to be like that again. When rates move to below, I would say close to 6, it might have to go below 6, but I think close to 6, things are going to get crazy because there's not only all these investors with all this money sitting on the sidelines with cash just waiting for something to happen, but people have to have places to live and they're jumping in too. So I think I read something like every quarter point that interest rates go down, like 8 million buyers enter the market. I'll have to find that so you can
I could
show
see that
notes.
because it makes sense.
But so I would much rather buy some things now and refinance it because they're going to drive, when all that happens, they're going to drive the prices up even more.
Yeah, I agree. And I think when prices go up a little bit, some people that were maybe like thinking about selling, but they're like, it doesn't make sense, will maybe sell a little bit and you'll start to see these transactions pop up. But what do you think about all those folks that said 2 years ago when the rates started going up, get ready, there's going to be 40% discounts and there's going to be a big crash in the marketplace?
There's always somebody saying there's going to be a big crash in the marketplace, like at any point. So people told me so I bought my first short-term rental in 2015. People were telling me in 2017, everything's overpriced. The prices are going to go down. Like I paid $150 for my first one. So when prices got to like $250, they were like, everybody's overpaying. That house is a $650,000 house now. So I think there's always just going to be those people.
Then in 2020, everyone said, oh my gosh, the pandemic, this is it. And I had just started getting into real estate investing like in 2019. And I remember people in 2020 were like, right when the pandemic hit, they're like, oh my gosh, are you worried? Do you regret buying all that real estate? And guess what? Then all of a sudden the Fed printed a lot of money and they lowered the interest rates. And then 2021 was like a bloodbath and like prices were going crazy and there's all this inflation. And then everyone was like trying to buy. And then in 22, when the Fed started raising all these rates, in 23, everyone's like, oh my gosh, this is happening. Get ready. Like there's going to be discounts in the marketplace. Put your money on the sideline. Like get liquid, get ready. The recession's coming. I'm like, where is it? I don't see it, right? Like all these restaurants that I go to here in Little Italy, my neighborhood, like even on a Monday night, like you can't even get a seat at the table. Like there's lines at the door. And you know, real estate prices here in San Diego at least have been untouched. So it's interesting to see, but yeah, I agree. I think we're gonna see when the rates do go back down, I think we're gonna see a lot more buyers enter the marketplace.
Yeah.
Yeah.
So
So where do you think the play is like maybe for someone listening to this show right now and you know, maybe they're thinking about do I buy a multifamily deal? Maybe this is the first deal for them. Maybe they want to get in the STR space, they want to do a small apartment building. What do you think is the right play for someone listening to this?
so for me, the path that I took to being a successful real estate investor, I think is a good way for any new person to get in. And that's with the short-term rentals and vacation markets because they're single family homes. So they're easier to finance than going to get a commercial loan on an apartment building on your first deal. It's one door with, one set of guests at a time as opposed to all kinds of tenants. So I think short-term rentals are a great way for anybody to get started investing in real estate. I personally stick to the big vacation markets. I don't like there are a few metro markets that I like that I'm okay with, but I don't like metro markets for short-term rentals just because it gets wacky when the market is not dependent on short-term rentals and when there's a lot of primary homeowners whose income is from, various industries that are not tourism. So I like there's a lot of people get really caught up right now in trying to like trailblaze and find the markets where nobody's doing short-term rentals. I got to be first. I'm like, but why? Because an example that I always use is like Starkville, Mississippi is where I grew up. For some reason, I don't know why. I think several people need to be fired over this at several data companies. Starkville, Mississippi has shown up as a great place to invest in short-term rentals. It's not. But I think that people see places like that on lists like this and go, "Oh, cool, nobody's heard of Starkville. I'm gonna do that." But you're gonna have a big problem because the infrastructure isn't there in terms of vendors and, cleaners. You're gonna have to hire a housekeeper who is used to cleaning primary homes and train them on how to turn a vacation rental. And it's just people are not gonna be used to what I call door code culture. Like, a lot of them are still you have to be there if the plumber's coming and things like that. I think there are markets like I could be successful in Starkville because I know everyone. I know why people go there and when. So I could probably do it. But I think that those lists kind of make people make bad decisions because they think, oh, nobody's ever heard of that. I'm going to do it. So for me, I like to stay in the big markets. So like the Destins, Panama Cities, Smokies, areas where it's really easy to do. You just buy a house and plug in. You're not having to do all this like insane training of people and putting systems together. All the systems are there. You just plug in. I like those. And I like buy the ugliest house in the best location in the best market is my strategy, which I think should be, it's my strategy, I think, across all of our asset
Yeah. I
classes.
mean, that's a known proven strategy.
Yeah. So I think that people with short terms, they just are trying to, yeah, I don't even really know how to describe it. They're still trying to figure it out. Like there's people who will now you can pay them to analyze and tell you where to buy and all that. But you don't have to like,
Overthink it.
yeah, and
Yeah.
go find this crazy market and do this crazy thing that's way out in the middle of nowhere. Buy in the market that people are always going to come to and fix up a house. You can fix up a house. You can't fix up a market or a view or, buy the house with the view.
I agree.
So that's my strategy.
I agree. Do you have any hesitation or is this part of your strategy? Like, do you prefer to go into a market that already has regulations set up so you know exactly what rules you're playing by versus a market that doesn't have any regulations yet, but maybe the local municipality could change up at any time?
I could go either way on that. I prefer to see something, but it depends on the market. So if I'm going to go into like a metro market that has no regulations, that scares me. But if I'm going to go into, again, a mature vacation market where people have been doing vacation rentals since before the internet existed and there's not any regulations, I personally am comfortable with that. I'm not going to recommend everybody be comfortable with that, but I am. So I'd like to see something, but depending on the market, I might be okay with it.
I agree with you there. I think like one of the reasons I love San Diego, and I know it's a metro market, is because you get the long term appreciation, but they have the regulations. And there was like a rumor that they had 16,000 short term rentals, at least on AirDNA. There was 16,000 listings when they started the regulation, and this is May of last year, so it's been a year. And I don't know if people were sleeping behind the wheel or what, but they slashed it to 5,500 licenses. Once they're gone, they weren't going to issue more, but there's still like 800 left. So I'm like, what is going on? But it was already a good vacation rental market year round, not a lot of seasonality. And then they slashed it. So I'm like, okay, this is kind of protecting your investment. I think some regulations is a good thing because it prevents the oversaturation. And so I'm like, there's 800 left. I'm like, this is a huge opportunity. So that's why I'm buying more. But I don't know. I agree with you. And it's funny because, like, we're buying hotels now. And by the way, before I forget, one of the members in our boutique hotel community, his name's Cassidy. And he heard that you were coming out to San Diego, coming on the podcast. And he was like, hey, I reached out to Cassidy a little while, but I'm sorry. He said he reached out to Avery, a while back. And he's like, I'm trying to get on our podcast. He's actually going to come be on my podcast next week. He's going to be in town. He said, what are the chances you can ask Avery if she can get me on the podcast? And I said, consider it done.
Yes, yes. I do have his application that was like 2 weeks ago. I put
Okay.
out like, we
Okay.
need
So
to
it
get
wasn't that
some
long ago.
people. Yeah, it
Okay.
wasn't that long ago. So
Okay.
yes, I will definitely talk to him tonight
Okay.
and we'll have him on for
I
sure.
love it.
Yeah.
You're amazing. And thank you. He's a good dude and he's got a ton of short-term rentals and a ton of experience, but very well spoken. And now he's getting in the hotel game.
Oh, cool.
So yeah, good
I
dude.
would like to buy a hotel. I
Yeah.
don't. I look at them every now and then. I'm Crexy. Like this is so dumb. I don't listen to why I want to do this. This is just something that I want to have, like a Route 66 motel, like in the desert somewhere in New Mexico or Arizona, wherever Route 66 goes. I know it's in the desert.
That's totally like
I'm so smart, right?
that's
With
totally
great
like your vibe though. No, it's like totally your vibe.
Yeah, I want one of those, but I haven't gotten around to. It takes me a long time to get into a new market or a new asset class. I just gotta like
Well,
ease into it.
you self-manage all the short-term rentals that you have, right?
Yes,
So
yes.
you already have like basically all the fundamentals that you need to operate a small hotel.
Yeah.
Yeah, like the transition for you would be like seamless.
Yeah, I just gotta like pull the trigger. It's like one of those things I play around with on the internet, like at nighttime.
And you're already like you have all this experience with the apartments. I always say like these small boutique hotels where you're doing like the self check-in, self checkout model where you don't need like an on-site staff. And there's no food and beverage component. I'm like, it's really like if you take multifamily deal and like a short-term rental and kind of marry the two, that's basically a small boutique hotel. So yeah. And let me know what I could do to help.
Yeah.
Yeah.
You
No, I'm
gonna find
serious.
me one?
Go call me anytime. I'm happy to help in any way I can. But I could totally see you doing it.
Thank you. Yeah.
Yeah. Is Luke on board?
So with Luke, he does all of our operations. So if I get a wild hair and want to buy a Route 66 motel, he's the one that has to do all the things. So
So you're just like the visionary.
yeah. So what I have to do with him is make it seem like it was his idea. Because if it was his idea, then he'll want to do it. And there's been so many times we've been married for 10 years now. So many times I'm like, hey, let's do this thing. And he's like, no, I don't think I want to do that thing. And then like 6 months later, he's like, babe, I found the coolest thing. We're going to do this thing. I'm like, you said no to that not 6 months ago. So I have to like kind of let it marinate and let him come to the idea independently. So I'm about
Who would
starting
you
that.
say has a bigger vision in terms of like, hey, I want to buy more real estate. Like, let's keep the gas on the foot on the gas pedal. You or him?
We kind of go back and forth. It depends on who's fired up at the time. Because if Luke gets fired up, there's like no stopping him. He will go buy 6 today.
Okay.
But with me, I want to look at it for a little while and I want to look at everything and I want to go to these places. And so it takes me a little bit longer. It just depends on right at this present time, like today, I'm the one sending him deals saying, we need this. And he's like not responding about it. But, last week he'd be like, oh, how about this? And I'm like, I'm comfortable right now. So it goes back and forth.
Yeah, I love that. I feel like there's a lot of couples, well, not a lot, but there's a few that like are in the short-term rental industry. So like you and Luke. Who else we got? We got Sarah and Tony Robinson, and maybe a few others. I always thought it'd be cool to like buy real estate with your spouse or your partner.
Yeah, it works really well for us. But we were weirdly like, people ask us that question sometimes, like, how do I get my spouse on board? And we don't really have an answer for that because we both just kind of were on the same page. Like, oh, yeah, let's do this. So I don't really have any advice on that. It just happened to work for us. And it works really well. So I typically do like the front end stuff. Like I'll usually end up choosing the markets and find like doing that front end research, and then he does like the operations side. And same thing with the short term shop. So I do most of the front end marketing and stuff, and then he does all of the mastermind training and everything.
I've never been married, so it's probably not my lane to speak on, but I'm gonna say, if you got a spouse and you're wondering how to get your spouse on board and trying to buy some real estate and your spouse is pushing back, maybe you gotta find a new spouse.
You might. I mean, it depends on a number of things, but yeah, I mean, it really helps to be on board with the big decisions like that.
Yeah. I mean, if it's a wealth building tool and it's gonna create a little bit of financial freedom, I mean, if your spouse is kinda hating on that, then I don't know.
I think sometimes you just have to show them.
Yeah. And I think what it comes down to, and I say that lightly, by the way. I think what it comes down to is like level of risk tolerance. I think some people have a higher level of risk tolerance. Some people have a lower level of risk tolerance. And I think often when you have a lower level of risk tolerance, it's because you're just not educated enough on this new thing. And so it's like, oh, real estate investing, you could lose a lot of money, but I've never done it before. It's like, okay, well, you just need to get around people that have done it before and
Exactly.
get a little bit more educated so you can actually have the confidence to take the leap and do it. And then once you do it, you're like, oh, this actually isn't that scary. And
Yeah.
it actually works.
And Luke is like my leap person. So I'll like have all these ideas and what about this and what about that? But I won't necessarily do it. And Luke is like, got his foot like taking me off the diving board. Like, yeah, let's go. So he like makes sure that we do it. I'm like, how about this? And then he's like off, out the door doing it.
I'm kind of the same way. I'm like, when I come up with an idea, I'm like, I'll come up with an idea. I'll tell the team like, okay, let's roll this out in 24 hours. They're like, what? What are we gonna do? I'm like, we'll figure it out. Let's just do it. And I don't know. I feel like when I make a decision, I want to go quick. And I feel like that's kind of where a lot of the growth happens, you know? And that's where you learn. And I'm like, let's just make a decision and go with it. And I tell the team all the time, like, we got hundreds of decisions to make each week. I'm like, let's just make a decision and go quickly. And if it's the wrong decision, it's okay. We'll pivot and we'll get better from it. And
Yeah.
that's it, you know? So, what are you working on for the rest of the year? Any cool stuff, projects that you're working on that maybe gets you excited, other than the boutique hotel on Route 66?
Yeah. Route 66. Got to buy 2 short-term rentals this year at least.
Okay. Why
And
you need more depreciation?
yeah, that and just, got to buy something. And like, again, the market is,
Why don't you
is
come buy
rough
one in
out
San
there.
Diego? Take advantage.
Yeah. Maybe I should do that.
I'll help you.
Yeah. My brother lives out
I'm
here.
gonna help you
So.
buy 2 deals this year, a hotel and a San Diego property.
So I'm looking, I want to buy one in the Texas Hill Country this year and one other one. That one, I don't care where it is. Maybe 2 in the Texas Hill Country. Maybe.
What's Hill Country? Where's that?
Okay. So it's the area to the west. Yes. West of Austin and San Antonio. It's kind of like a weekend market. There's a few different towns out there. There's a bunch of rivers. It's Texas wine country. So it's like a big just weekend getaway for Texas folk. And so Austin and San Antonio are both growing so fast that eventually, and they're really only about like, can't remember. I haven't lived in Austin in a long time. I lived there for 8 years. I would say like an hour and 15 minutes apart. And they're both growing so fast that eventually it's going to be like one metroplex.
Mm.
And Hill Country is already a great market. We've got an agent there. We've been there with a short-term shop for about 2 years now. But I think as the cities grow and continue to, that it's just, going to be more tourism on the weekends too. Plus, I just want to own out there because I miss it.
I love that.
Yeah.
Question for you. I know Broken Bow was like a up and coming vacation rental market like a few years back. Is it still like a pop in hot short term rental market?
Yes, it still is. So we have an agent there too,
Okay.
Kathy. And Broken Bow is such an interesting market because it's new and it's kind of way out there. It's mostly Dallas people that go there. But all like what is considered just an average cabin in Broken Bow would be like an ultra luxury cabin in the Smokies. So the level of luxury in Broken Bow is a lot higher than other cabin markets. But they do make more money than other cabin markets too. And so the growth for attractions is just kind of starting to happen in Broken Bow. So I think there's definitely still a lot of runway there. But it's definitely an interesting market.
I remember seeing, this is probably 3 years ago. I remember like looking at a few properties there. I never like visited in person, but just like browsing online to see like, how much stuff traded for out there in like really nice, brand new, really high end, like 1 bedroom, 1 bath, like cabin, maybe 1,000 square feet, but like really, really decked out with high end finishes and showed very well. At least on photos, would trade for like 700,000 back then. Has that pricing softened, or is it still expensive like that?
It's softened some, but it's still a decently expensive market.
Okay.
Yeah.
Yeah, that was
Mm.
pretty impressive. I was like, damn, that's like what is that, $700 a square foot?
Yeah.
Pretty damn good. So, what are like for someone listening to this right now, they want to get into an STR deal and they're looking for maybe a handful of good short-term rental markets out there that no one's really talking about. Any good ones out there that you like?
That one good ones that nobody's talking about that much.
Or maybe people are talking about them.
Yeah.
Where would you if you're let's say your grandma was like, "Hey, Avery, I wanna buy a short-term rental, and I want you to, like, pick the market." Where would you buy that short-term rental for her?
So right now, I I think that the way interest rates are right now, if I'm advising other people and not myself, the way interest rates are right now, the cheaper markets, you feel that interest rate less on a cheaper property than a more expensive one. So, Branson, Missouri is a great one. Myrtle Beach, also great. Those are good. You can get in for 250. And so I like that for new people who are learning and, it's not this huge, huge payment that they're having to deal with every month. And I did on my podcast, let's see, probably about 3 weeks ago, we did a string of in-person interviews with our past clients in the Smokies and with, just our agents that own stuff in the Smokies. We just did all things Smokies. And continually we heard from people, and I found this to be true in my portfolio as well, because I have a studio, and that everybody was like, I really, really like my studios and my one bedrooms right now. They're really crushing it. Cause I feel like we're in a
In
little
the
bit,
Smokies.
yeah, in the
Interesting.
Smokies. Yeah.
I guess it makes sense because a lot of this product out there is, like, three-bedroom and larger, right?
Yeah. And all the builders, all the saturation that's happening is 4 bedrooms and up, because it doesn't make sense for a builder to go do a bunch of one bedrooms. The margins aren't really there. So what I found is in vacation markets, this doesn't work in metro markets because you'd be competing with hotels. But in vacation markets, the studio and one bedroom size is almost never saturated. It's almost always less than 1% of the available rentals. And so, even in times when, the market's a little bit softer, the rental market's a little softer, and the big ones aren't renting as much, the little ones are still cranking it out. Like we
That makes
had,
sense.
yeah, I mean, every single person I talked to was like, yeah, my one bedroom's doing 70,000. And I'm like, yeah, my one bedroom did 60,000 now that you mention it.
How much can you buy a one-bedroom out there for?
It depends. I would want to see it for like under 500. But it just depends. So I like the cheaper markets and the small properties right now. I don't dislike big properties, but if you're new, that's a big bite to take for that monthly payment. So little ones are pretty exciting.
Yeah. I'll be out there actually, in September for Blake Daly's, he's hosting a hotel con.
Oh, cool.
Yeah, it's a hotel conference at his, new hotel out there, about 130 unit, hotel in Townsend, Tennessee.
Oh, yes. Very nice. Very
And,
nice.
so he's doing a little conference there. I'm gonna be speaking, and, so I'll be kind of close to the area, so
Oh,
maybe I
maybe I'll
have
shoot
to
up there.
go check out some one-bedroom, cabins out in the
Well, you know who
Smokies.
to call. We'll take
Yeah,
you.
I love that. Well, Avery, I appreciate you coming on the show and talking shop. I'm excited to, go hang out with you and Amanda at the meetup here in a little bit, but, where can the folks get in touch with you?
Yeah, you can hit me on Instagram at the Short Term Shop. We've got a link tree there with a link to our website, all the markets that we have agents in. And if you buy a property with us, you are in our mastermind for free.
Oh, tell me about the mastermind.
So it's every Monday, and we have the first hour. We call it Management Monday Mastermind. So first hour is for newbies who are just like they haven't closed yet with us, and we're helping them learn everything they need to know to get set up and running for their closing. So we typically do that with them after they're through their inspection period. So we know, like, okay, this is the property we're buying, or it's not going to fall out during inspection. And we get them ready to rock before they close. So they already know. And then the second hour is we'll have a different topic every week. We'll bring in, like last week we had an attorney. We'll bring in all the specialists. We'll bring in Amanda at some point, talk about some taxes. So first hour for newbies, second hour for more experienced people who might have questions on certain things.
I love it. Well, there it is. She's Avery Carl. I'm Rich Summers. Listeners, thanks for tuning in. We'll see you in the next one. Peace.